And we should be good. All right, so we're getting into this. All right, so first and foremost, we're gonna have a look at these markets. I tell you what we're gonna do. We're gonna do a little bit of back testing today. We're gonna do a little bit of back testing, and we're gonna do so you guys can see the strategy playing out. We're gonna do a little bit of back testing, then I'm gonna introduce a few things that maybe you're not overly familiar with, but the things that can help your confluences. All right. So we'll start on GU. I tell you what we're gonna do. First, we're gonna fly through these pairs. I'm gonna fly through these pairs and just see what's outside candles. I'm gonna wipe our charts for everything, all right? So we're not carrying over no markup from last week. Nobody's out here saying, well, they don't know what's going on because they haven't seen the way things are marked up from the jump. So every single pair we're going to wipe clean, all right? So first and foremost, this is our JER 30, all right, our DAX, okay? And first and foremost, so for the people that are brand spanking new, I know that there's some people who came in the call and dropped out on that because there was no sound, and the latecomers will be late. But for the people that are here, understand this: it's like you getting £1 million education, and you're the only person in the class, or the class is a small class. Take advantage of it. All right, ask questions. Yeah, be somebody who you want to know, you want to learn. Yeah, I turn around and say to my son all the time when he asks me stuff. My son, he'll be on Fortnite, he'll be doing this, he'll be watching some other stuff on the internet. Then he'll ask me a question. I say to him, listen, you must learn how to learn. Do you understand? In this day and age, you have a lot of resources around you that allows you to be able to empower yourself and learn. But a lot of people need to learn how to learn. Okay, they prefer to play, I don't know how. They prefer to play, nobody showed me. But in this day and age, there are enough resources to allow you to learn how to learn. Okay, so in a classroom setting, that takes on a new beast, right? That takes on a beast of being able to, for yourself, either be in front of the charts at the same time. If you're not in front of the charts at the same time, but you see something, it just doesn't make sense. Be inquisitive. Be that person to ask the question, because trust me, more than likely somebody else has got the exact same question. Yeah. So don't ever feel to yourself that you're not, you're too shy, too proud, whatever it may be, to put up your hand or to unmute your mic and say, I beg you, can you show me that one more time, please? That's the whole point of the live sessions. Okay. This is the difference that gives this, substantial more value than you going on YouTube, for example, and just watching videos backwards and forwards. Watching videos backwards and forwards, first and foremost, are after the fact. Two, you don't have the ability to ask those questions. Yeah, you don't have the ability to see what I do from the jump. This is JER 30, and for me, I've marked this up now. I've opened it up, I've zoomed all the way out to the larger time frame, and on the daily time frame, I'll put some lines in, and I could keep going if I wanted to, and keep putting some lines in. All right. Now, you don't need these lines. This isn't something that ultimately I have to do myself every time I start trading. Okay. However, this is something that I'm showing you can give you some sort of perspective and understanding of the markets that you trade. This market is showing me, saying, Jay, listen, I am extremely bullish. Since at least 2004, I have been making higher highs and higher lows and higher highs and higher lows and higher highs and higher lows. COVID is telling me, it's screaming out to me. It's actually giving me more information. It said in COVID, I did have a little bit of a blip. Yeah, this is COVID. Yeah, 2020. I did have a little bit of a blip, but apart from that, I've been making higher highs and higher lows and higher highs. And that's all I have been doing. So I come to the charts today and I go, okay, well, I'm going to assume that you like to make higher highs and higher lows. I can't come to the chart and say, because me, JP, the Almighty, has come to his laptop today, that you are now going to be making lower lows and lower highs over a large, over the next how many years. I don't know that. What I do know is since 2004, we're making higher highs and higher lows. Now, that doesn't mean I'm just going to buy, because I'm not trying to buy and stay in this trade for a month and a half, 2 months, 3 months, 6 months. I want to get in and out of the trade today because I am a day trader. Okay. So though I've made these lines going all the way back to weekly and daily, they're not magnificently significant for my entry and my exit out of the market today. Okay. But it does put things into perspective. Now, we can see that this market here within this white range has pushed up right up into the premium. In fact, to all-time highs. All-time highs over here, meaning there is actually no information if I look left in the past, because I can't look right. I wish I could look right into the future. Yeah, but I can't. okay, for me to make my decisions. So I remove that confluence of being able to look at previous historic data of key levels, points of interest, imbalances, yeah, bearish engulfing or engulfing candlestick patterns or candlestick patterns. I don't have that. Well, as in from this high, but we can see here that this market has come all the way up into this high, and the market has actually had a change of character. That change of character has been the fact that the market's been making, and now you can watch my dots, okay? Higher highs and higher lows and higher highs and higher lows and higher highs and higher lows and higher highs. And right now, I'm gonna make this a different color because it's the black sheep or it's the white sheep, however you want to take it, all right? Is that this market has done something different. It has now made a lower low, okay? So the market is making higher highs and higher lows with no with no excuses. Yeah, it's making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. And all of a sudden now we've made a lower low. Okay, so in the back of my mind, what am I thinking? Does anybody know what I'm thinking in the back of my mind if we've just made a lower low? What might be coming next? Does anybody know if we've just made a lower low, what might be coming next? It's not for definite, it's not 100%, but what might be coming next? Come on, let's activate. I know there's a couple of you on the call, let's activate. Yeah, if the market's been making higher highs and higher lows and higher highs and higher lows and higher highs, and we just made a lower low, what might be coming next? What might be on the cards of them?
Lower high.
A lower high. So I'm thinking to myself, even though the market is breaking down here, it's possible that this market, might push back up in here to make some sort of lower high before it may continue making its journey, making lower lows. All right. So I'm looking at this market right now and I'm identifying certain things. I'm identifying points of interest. Points of interest includes liquidity. It includes imbalances. It includes candlestick zones. It includes anything that, that I believe may have a effect on price. Okay. Now I can also see something here on the 1 hour time frame, which is what we call, in fact, I was going to say something, but it's not the case. Let's go to my 4 hour. Okay. And this 4 hours got an hour and 49 minutes left. Now, if this candle does close down here, we will be able to see something that we call an inverse fair value gap or imbalance. All right, which is a sign. It's a reversal, a confluence of reversal, meaning that the market is very, very bearish. Yeah, and this market came back and pushed down here. So this is, this is showing that this market, so say for example, this market came up here, the market is very, very bullish. This inverse, let's pick out this one, in fact. This inverse fair value gap or imbalance shows that sellers have taken over. And that's why this market kept coming down here. Now, whether this market is going to close down here in an hour and 49 minutes, I don't know. I don't believe so. Yeah, I believe it's going to grab liquidity and turn around first to make our lower high. Okay, to make our lower high. So we're looking over here and we're looking for those points of interest. So a point of interest that I can see here on this JER 30 is I can see liquidity potentially sitting below this session low. Now, how do I know it's a session low? And what do I mean by a session? I just mean there are different sessions in the markets, different cycles. There's a New York session. There's a London session. There is a Asian session. Okay, these are different sessions, different times where the markets are open, okay, and traders are trading. Okay, there are different times where the market is open and traders are trading in those sessions. Okay, and here I know that this yellow box, because I've got an indicator on which only shows me the sessions, is a previous London session. So this does become a bit of a target of liquidity sitting below there. We can also see some imbalance also sitting in here. And these, we understand, are all draws on price. Yeah, they are things that price like to see, that price chases. So I believe that this market from here, just looking at it just from this perspective, on a 1 hour perspective, I believe that maybe this market may want to push down into here, and take the liquidity from below London session and potentially tap into this imbalance. That's my initial knee-jerk reaction of maybe this is what that market wants to do. Yeah. And when it taps into there, I have the ability then to drop my time frame down, okay, and look for what I look for as a confirmation to get into the trade. And that ultimately is a manipulation W or some sort of break-in structure. Okay, so what do I mean by that? I mean that the structure at the moment, even on the 1 hour time frame, is lower lows, lower highs, lower lows, lower highs, lower lows, maybe making this little lower high here before it comes back down in here. And if I drop my time frame down, it becomes clearer. Have a look at the 15-minute time frame. Can you see? Lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. I want to see the market break structure. Okay, I'd like to see the market break structure. When I see a 1 hour imbalance, a complementary time frame for looking for that breaker structure will be all the way down in my 5-minute time frame. I'd like to see that market come in here on a 5-minute time frame, tapping into here in some sort of way, and then breaking structure. And then that may give me a retracement buy to make my lower high. And why is it a retracement? Because currently the market is bearish. All right, let me highlight this. Yeah, highlight like this. Currently, this market is bearish, making lower lows and lower highs. So if I get into there for a buy, it's a retracement. Okay, it's against the trend. Okay, so the market might come and tap into here, and then there may be an opportunity for a buy against the bigger trend. Now, the problem when you're trading against the trend is that that trade, you can't just go to sleep on that trade. And that trade is going to keep going forever and ever and ever. And you're going to wake up a week later and you're going to be a millionaire. It's not going to happen because you're going against the trend. So at some point, that market's going to turn around and be like, we're done, bro. We're turning back around and getting with the trend again. Yeah, at some point, that market's going to get with the program and say, I'm going to go back in the direction that we want. All right. So therefore, we understand that this trade, if we do take a retracement trade, we're going to trade it to structure, take our money, and then be happy. Yeah, we're going to protect. Let's imagine, I'm playing it forward in the future, that this market taps into this little area here, this imbalance, breaks some structure in here, and starts to push up. I will be trading that to the next level of structure, meaning the next high, yeah, or the previous high. Okay, and then once it gets there, I will be looking at it, seeing how the market reacts, but more important, I'll be protecting myself or taking some profits. So what I'm going to do with this is just the first one we're looking at. All right. And I'm going to place an alert here when the market crosses down. I'm also going to place an alert all the way up here if the market doesn't care what I've just said and it's going to decide to do something completely different. Because let me tell you something for free. This is my disclaimer. I do not know what the market's going to do. Okay. I wish I did, because I'll tell all of you that. I'd say at this time, 10:51, the market's going to be doing this. And then at 11 o'clock, it's going to be doing that. And then 11:25 is going to be, but we don't know. Okay. All I can do is analyze the market based upon my knowledge, which is what I'm embarking on you guys, so that I can have high probability of understanding what these markets want to do. There is a high probability that this market wants to go and take that liquidity. There's a high probability it wants to come in here and tap into this imbalance, because I've seen it happen time and time and time again. So if I've seen this scenario 100 times and 89 times out of the 100, that's what it does. Well, that's what I'm leaning into. Okay, that's the reason why I'm saying that. Not because it's just, I'm just saying it out of the wind, because I've seen it happen 89 out of 100 times. Yeah. Now, could it just come here right now and turn around and start going up? Yeah, because that might be the 11 times that it doesn't. But either way, my money won't be in the markets. My money will be in my pocket, and I just won't care. All right. So that's the first market we're looking at. I just want to see on a daily time frame. Let's try and frame the daily time frame, understanding whether our last candle. So look, we can see that previously, our last day of trading on a Friday, we had this red inside candle. Okay. We had a red inside, like a non-outside candle, but a red inside candle. What I can see here is I can see that there was a bit of a gap here, which, let me tell you something, just like imbalances, the market doesn't like gaps. So maybe that opportunity to get into a trade here for, remember what we said, potentially a lower high to form, yeah, maybe possibly come all the way back up into this level in here to close this gap before deciding it wants to continue. Possibly. So I'm framing what possibly could happen. Maybe this doesn't turn around in this imbalance and wants to tap into this previous battlefield over here and then turn around. I don't know. But either way, until I get my confirmations, yeah, I'm not in the trade. But my money's in my pocket. Okay? So I haven't got nothing at stake, okay, until I get my confirmations. I've got some alerts in here. I'm gonna wait for them to ring. Alternatively, I'm moving on to the next one. All right. Let's go and look at our EJ. Now on our daily time frame, let's see whether our EJ previous candle. So the previous candle on Friday on EJ was actually an outside green candle. Yeah, outside, meaning, let me wipe my chart so you can see. Remember, I don't want me saying anything. I'm not one of them teachers where I just want to be saying some stuff really quickly and my students or people that are trying to learn don't understand what it is I'm saying. Yeah, I want you to stop me dead in my tracks and say outside candle. What does that mean? Yeah, so that because if you're asking, somebody else wants to know also. Yeah, if you're asking, it's a flaw in my teaching, or maybe you missed that lesson, or you didn't get that bit of education to understand what it is. And I have no problems. Yeah, that's my disclaimer. I have no problems repeating myself 100 times. Yeah, to make sure that you can understand what's going on. Okay. Otherwise, what is the point? All right. So we can see here, this is EJ, and this market ultimately, as I said previously, and I've said many times, has been trading within this box. Okay. Now, if you can't see that, it's because you don't know how to look or you haven't looked. Okay. I'm showing you the thought process. This market has been trading within that blue box. Yeah. We haven't, that's all the information I've got at the moment. The market came up here, brrr, came all the way down here, brrr, came back up, into these levels. We're in this box until we're out of this box. Okay. Now, on a daily time frame, the previous candle was an outside candle, but let me lock this because it's moving. You can lock your tools, guys. Right click on it, click lock, now it won't move. We can also see that now since July 2024, we can see this market has been consolidating in this box. This is not my opinion. This is a fact. All right. This is not an opinion. This isn't, he might be wrong. This is no, I'm looking at historically, this market has been trading within this box. So therefore, as much as, we do or we don't like consolidation, on a bigger picture, the top of this box becomes, what does it become? The top of this box. If I'm going to split this box into three, what does the top of this box become? Somebody knows. What does the top of this box become if I was to split it into thirds? If I was to split it into thirds, what does the top of this box become?
Oh, what? Premium.
A premium. Thank you very much. I knew you guys were activated. You're just trying to you're just trying to get to the mute button. I know how it goes.
You've done already.
Yeah, you know how it goes. I was like, yeah, when you get air, you ask a question, it's just tumbleweed. Yeah. But like the top of this box here is a premium. Okay. And the bottom of this box is a discount. And in the middle, ultimately, we don't want to do anything. I mean, let me tell you something. And what do I mean by that? I mean that every time this market gets to the bottom of this box, it goes up. Buy. When it gets to the top of this box, it goes down, goes down, goes down. Okay? Now, the market does what it has always does. The market is going to do what it has always does until it decides to do something else. All right? So my point I'm making to you is at some point, this market will break outside of this box. That might be today. That might be tomorrow. That might be next week. I mean, it's been bouncing around in this box since, August. That's like for about 5 months. Like, who's to say it's not going to bounce around for another couple months? I don't know. All right. But what I do know is, therefore, I have a bias when we get up into these top of this range. My bias is potentially for a sell. Yeah. And down here, my bias is potentially for a buy. I understand that there is liquidity building up here, above here, and below here. And I can either do nothing because I don't trade accumulation or sideways action. Some people do not trade sideways action. Or I can turn my, because they don't trade sideways action, because there is liquidity building up in both of those circles of all the stop losses of everybody else saying that this market's been trading in the box. Yeah. Our GL30 is crossing down into that box. Let's go and have a look at it so we don't miss anything. What did I say? I did say that there was a higher probability of this market, if I go all the way down to my 5-minute time frame and refresh, trading downward into this kind of gray area. And it seems to be we're making our way up. My alert just rang a little bit early there, okay? But it seems to be pushing into that, all right? And that actually becomes another one of our plays, all right? Which we're not doing now, but I can tell you about it. Another one of our plays is actually trading down. If you understand how to enter and how to see the volume and where it's going, it's trading down into where the market's trading towards, i.e. and liquidity. Like you could buy quickly into liquidity. Like if I wanted to, and I was in a rush, I could quickly see this market. I could quickly hit for the sell to buy into this liquidity. But I have to know where I'm getting into, where I'm placing my stop loss. We're not just taking trades with no stop losses. We're not just taking our trades where it doesn't make sense, i.e. we don't at least see a 1 to 3 in the trade. But understand that a lot of the times when we're waiting for the market to push into a level, that itself is a move. It's not something that I believe that, you guys, unless you're very, comfortable with the core strategy, you need to worry about. But just know that play alone on a smaller time frame, it pushing into liquidity is actually a play. Okay, it is actually a play. All right. So we're sitting here and we are watching this market. No, we're not watching this market. In fact, we was looking at EJ. All right. And right now, I don't love EJ because we're kind of in the middle of this consolidation. And I don't love consolidation. If we was right up here on the cusp here and I started seeing the market going sideways, yeah, and trying to do something that's different. But at the moment, we are kind of in the middle. So I don't really care about it. It's not something that I'm going to be looking at today. Let's look at GU. All right. Let's look at our GU now. Now our GU was here. I'm going to wipe the charts again for GU. Every single one we are wiping the charts. On a daily time frame, we can see that the previous candle on Friday was an outside green candle, meaning that it closed outside of the range of the previous candle. Now I'm going to take that orange line off and I'm going to make it actual color. All right. It closed outside of the range of the previous candle. All right. And therefore, we understand that because the markets don't like imbalances, there's a probability, there's a high chance, and I'll make it green over here, showing me it's an outside green candle, that the market wants to come down in here to close the imbalance, at least 50%. And then potentially we might be making our way to make another outside green candle. You see, outside candles makes us assume that there's momentum. Now look at this one. Boom, there's a big green outside candle. The market came down and closed the imbalance and then persisted for the rest of the day to make another outside green candle. Yeah. Now it wasn't a very big, convincing outside green candle. So the next day we kind of saw this market just teeter around a little pace. But now we see another big green outside candle. We could have at least traded this into the sell. We could have traded a buy from anywhere from down into these levels, assuming that we're going to get above this green. So we're doing the same thing here. We can have a sell down to close this imbalance if the market shows us that that's what's on, the sell, or we can buy up if we see liquidity being taken to try and see this candle become another big green outside candle. Okay, so we can drop down to what we can see here on the daily time frame. The market's come and tapped into this area. On a 4-hour time frame, we can see that currently the market has come and the market's actually created, I said this, on a 4-hour time frame, it's created this kind of inverse fair value gap. Yeah, this kind of inverse, because there's a gap here on a 4-hour time frame. And below that, we can also see, a little imbalance in here. And this kind of says to us that there might be a reversal of this market pushing down here into these levels. All right. That the market, bulls were in control, boom, 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 boom. And then the market kind of skipped here. I really like to see this, the fair, the inverse relationship, the inverse fair value gaps actually coming and closing all the way past the actual hole in fair value gap personally. But we're still watching it. Okay. So now we drop our time frame down to a smaller time frame and we're looking to see, has this market done anything to give us an entry to allow us to get into these markets and benefit? Well, look on the hour time frame. I can see some beautiful imbalance in here that the market tapped into. I can also see that Asian session lows were taken from here. Have a look. Look at Asian session lows. Was taken from there. That dotted red line is a bit difficult to see. Okay. I can also see that the market came and took those lows. Let's drop all the way down to let's go to our 5-minute time frame. The market pushed all the way and took those lows. And can we see any manipulation happening? Well, we can see a lovely manipulation W happen. Boom, 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 like this. Very big manipulation W. And we can see that the middle of this W is in and around this area. The market's wicked into that area, potentially tapping into some additional imbalance here as well. Again, we can see this, look, inverse. Can you see this inverse fair value gap again that was in here, or inverse inefficiency in here? So meaning the market was very, very bearish, and then boom, jumped over here, showing that the bulls are in control. This is a bullish confluence of it making this inverse fair value gap here. And therefore, as soon as it does that, we could literally get that made that manipulation W. We can decide that we want to get into this trade here when that candle closed and tapped back in, placing our stop below these lows. Now that would be a 23. Let's just round up to a 25 pip zone, okay, which is quite a large zone. Well, it's not quite a large zone, but that's the zone. And what we'd be looking for is, target-wise, is the market, in my opinion. Remember what we were saying, look, on a 4-hour time frame, that this market, on a 4-hour time frame, what was we saying that about GFA? If we were saying about GFA, so let's draw some more lines in here, okay? We can see, we want to draw some lines in here. I was going to say we was going to start saying something, but we hadn't said it. We said it about GFA, all right? That we are up in a premium, okay? We're at the top of this trend. We're in a premium, all right? So I don't necessarily believe that the market's going to go up to space, but I don't know, all right? I do not know. We've just taken liquidity from this swing level, this major swing low, okay? And we came all the way down to this swing low, and we didn't want no trouble, okay? We didn't want no trouble over here. And remember, in a bigger picture, oh yeah, sorry, we haven't marked this up on a bigger picture. That was just 30. All right, sorry. All right, on a bigger picture, we're looking at this market and we want to understand what's going on. Well, on a bigger picture, we can see that this market has been bearish. Yeah, has been making them lower lows, has been making them lower highs. Okay. So ultimately, we know we're in a premium, and the sells sound great for us to get into a sell. Okay, we can see the market was trading up here, then the market's broke this major swing structure. Now, don't get it twisted. This market, if it wanted to, after making this break of this little swing structure, can decide it wants to come back up in here before deciding it wants to come back down in here. This is why we must trade what we see. Okay, we can't trade what we don't see, and at the moment, so we have to trade what we see. So ultimately, this market could decide it wants to continue pushing up, closing that gap that I was saying over here. So from here to here, we're looking at about like a 1 to 1.5 to close that gap. And that's not really what I want to see. I want to see at least a 1 to 3 for me to take a trade. So at the moment, the opportunity here for a 1 to 1.5 is not, I'm not over the moon about it. Okay, now what I can do is take a higher risk trade as and when the market continues. So this was this we want to see an indication. Yeah, so here we can see there is some minor 5-minute structure in here. Look at it on the lines. Can you see in a 5-minute time frame? We can see this middle of the W. All right, and we have had a closure above that level. We did get a little bit of a wick retracement in here. I would like to have seen it deeper into this imbalance. But if the market continues and closes above this level here, then potentially we could take a more aggressive entry like this below these lows. And straight away, that's now giving us our 1 to 3. So I'd prefer to take a trade without a tight stop like this. Now, what does that mean? It does mean that the market could come down and stop us out. And ultimately, a strategy, I did speak about that. Really, we want to be placing our stop below these swing lows. We do. So I could turn around and say this. It's up to you whether you want to get into the trade, but understanding that it's going to be, I can't say that. All right. Because the trades, we need to look for at least a 1 to 3 in a trade to get involved. All right. So it's either you're going to not touch this trade because you're not able to place your stop below these lows. Yeah. Remember, I may be incorrect. This market may decide it wants to keep going straight past this gap over here. Okay. Because it came down to a major swing low. It came down to it tapped into this imbalance here, and maybe it wants to push up and take the liquidity all the way above these. Well, I believe the market's coming up here. All right, I just believe it's about our entry. Yeah, I'm not gonna lie to you. I believe the market's gonna come up there because it's about the entry. So I'd say if I was gonna take this trade, unless it comes down and taps into this level nicely, and if it does come and tap down into this level nicely, there is an ability to drop our time frame down to a smaller time frame, but based upon our strategy that we agreed we're going to be taking from last week, we don't want to be looking at anything less than a 5-minute time frame. But there would be ability if the market comes and taps in here to drop our time frame down to a 1 minute, see if we get early confirmation. So this is looking like about 15 pips now, okay? And I'm waiting for a closure above this level, and I have my always cashback calculator open, okay? That calculator is open, meaning that if I'm going to take a trade, I understand how much I can invest. All right. If I'm going to take a trade, I understand how much I can invest. What size is my lot size going to be? So if I understand that the risk is going to be 15 pips, let me show you here for argument's sake, guys. Let me show you here, even though I've shown you a million times. All right. This is our cashback Forex position size calculator. This is GBP USD. I'm using US dollars. This is my stop loss, not in price. This is how it opens up like this in price. I hover over here. I click this. I make it pips. So this is now my stop loss in pips. This is my account size. And this is the risk I'm willing to take. Okay. Whether that's going to be 1%, 2%, or 0.1%, 2%, depending on what you're trading and how. All right. And then in here, I put in my pips, my stop loss in pips. And then I know if I only want to risk this amount of money, this is my lot size. And let me tell you something, even when you see it like this, you're better off rounding down. Do not round up. You always want to stay under this number. Okay? That's how you use your calculator. And your calculator must be used. If you're out here hitting the button without knowing what lot size, it's like you go in and I don't know.
Which one is that one? I can't find that one.
With the calculator.
Yeah, I only can see pip calculator, lot size.
No problem. Let me give you the link right now. It's in the group. Yeah. This is the link right now if you look in the chat. Okay. It's that you want the USD position size calculator. It's called the cashback position size calculator. Okay. Can you see it? I put the link in the group.
Yeah, I've got it now. Thank you.
Yes. So obviously that one's going to be on GBP USD because that's what I was opening, but you change it by going into the instrument and changing it. Now, what I will say to yourself is this, guys, going back to this, is when you're trading indices, there's something you must do here. All right. So let's imagine I put it on the NAS. Okay. You must know, say for example, this is NAS. I change this to pips. I've got 15 pips. Firstly, when you go to any indices or gold, you hit anything that's not Forex, you hit calculate first, then you hit this question mark, I don't know why, and this brings up your contract size and you want to make this pip size 1. Okay, you want to make it 1. If you make it 0.1 and you put this lot size in, you're gonna have a problem. Okay, make it 1. And what I'd say to yourself is this as well, test it. If you're not too sure, like your lot size looks a little bit too big or a little bit too small, test it. Move the decimal place smaller, not bigger, smaller, and then just take a trade, just hit the button. And then move your stop where you're supposed to be. And if that stop isn't the $200 or $100 that you're supposed to be, instead the stop is $10, well, you know you're too small. Move the decimal place back to the left. Yeah? Or if it's too big, straight away, or if it's, you'll know. But I'm saying, be a bit more cautious on it, like test it, because it really does depend upon your broker as well. Certain brokers' contract sizes differ. Okay, so we're here. I've got 1 minute 46 waiting for a 5-minute candle here to close above this level. I'm patient. I could drop my time frame down and start getting eager, waiting for it to happen on a minute time frame. It's just unnecessary. I'll wait. Okay, we are now breaking that little bit of a high, which is the little level. We haven't broken this swing high. Okay, we haven't broken this swing high in here, which is the last swing high before this lowest point. But from a smaller perspective of the market coming here, making an indication above this level, correction in here with some wicks into our imbalance, and a continuation. I'm happy with that, but I'm going to wait for 1 minute and 8 seconds before I take a jab. Yeah, I already know what my lot size is. All right, I already told you, I already know what my lot size is. So, oops. So I've got no issues there. I already know what my lot size is. And I'm waiting patiently to take a jab. All right. That jab is because the market has taken liquidity from below. It's because the market has broken some smaller structure. Yeah. It's because I've seen an indication, correction, and potential continuation, what the market wants to do. Okay. And I'm hoping that the market breaks past at least 50% of the Asian session range and starts to push up into this level, chasing Asian session highs for a start, but more importantly, chasing this gap and big inefficiency that we can see up here. Let's go and have a look now. Let's zoom in. We've got about 11 seconds. Is that candle closed above the way I want to see it close above? No, it hasn't closed above it at the moment. It's just dancing. And if the candle's dancing, then I'm dancing. Yeah, I'm patient. Because if this market turns around and says, you know what, Jay, in fact, we've just come up to 50% of this Asian session range. Here's the Asian session range. And we've just come up to 50% of that range. And we really don't want any smoke, and decides to come back down in this direction, then I won't be in the trade. Because it's shown me that it doesn't want to push up higher than what the Asian session has framed. Yeah. Even though the liquidity has been taken from below here, the market may decide that, listen, I actually want to continue pushing down deeper. Remember, in the bigger picture, we saw this in the bigger picture on a daily time frame, and we said that that whole area is imbalanced, that this market could decide it wants to come all the way down here, close this imbalance, and then decide it wants to try and make an outside green candle. Okay, could do. Yeah, it's done it before. Look, it's a big green outside candle here. The market came all the way down here, tapped into the order block here. Yeah, this bullish engulfing candlestick pattern, and then decided to go and proceed to make an outside green candle. It could do the same thing with a big old wick coming all the way down in here, and then decide it wants to make an outside green candle. It could do. I'm a bit concerned because we're at the top of a range. I am a bit concerned. That's why I'd prefer, I'm watching it here. I ultimately would prefer to be selling into that imbalance. I would. But the market is showing me at the moment that it's taking liquidity from up below, and it might go up first before it comes down. Remember, I said this is, against the trend. The trend is bearish. It might push up first before deciding it wants to come down. Okay, so I'm looking to see whether that little up push for a little 1 to 2, 1 to 3 is available to me. And then at that point in time, I'm going to be thinking to myself that maybe this market wants to come down in here and at least close up this orange box some more. Okay, we came to about 50% of this orange box, which is still a milestone, a point of interest. And then we've seen a reaction, but I wanted to see that 5-minute candle close above that range, which at the moment it hasn't done. I'm going to pop an alert in and I'm going to move on. My JER 30 was just ringing. I don't want to ignore it. I want to give all of my little babies equal attention. All right, so let's go and have a look here at JER 30. Look, we're right in that zone. Uncle said that we was going to potentially go in here. All right, we are in here now on the 5-minute time frame. So therefore, remember I said this was the hour imbalance over here. Yeah, the time frame that coincides with our hour. I showed you guys before we wrote it all down. It's like our 5-minute. All right, if we go to our line chart, we can see a little bit of structure as that market taps in there. And what am I waiting for? I'm waiting for an indication, correction, and continuation out of that structure. Yeah. Or some sort of inverse fair value gap, inverse imbalance. Yeah. Some sort of confluence, because right now there is nothing saying to me that this market wants to go up. Everything is saying to me that this market's going, not everything, most things are saying this market wants to go down. Lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. So this market might turn around here, or it might even push into this previous battlefield that I've marked here, and then decide it wants to turn around. Either way, I'm poised and I'm ready and I'm waiting to see Hua Quan. Yeah, I don't know what it's gonna do, but I'm getting ready. You know, when you're playing football, you see the defender gets the ball, the winger starts to run and position himself, put himself in the right place, getting ready for the through ball. The through ball may never come. Yeah, but if he's not on his bike trying to get, you know, in the gap and make the run, he's not going to be ready if the ball does come. Yeah, so it's the same principle here when we're trading. We have to identify, okay, this could possibly happen. So therefore, let me position myself in between this defender and the ball. Yeah, let me make sure my body's in the way, because if he does play it, then at least I'm be able to, you know, get the edge on the defender. If he doesn't play it, I don't get the ball. That's why I gotta be fit, willing to do the running, willing to make the runs. Yeah, what's the metaphor for that? Is that you guys gotta be in the game. You know, done enough breakfast clubs, taken enough trades, understanding the language to be able to see the potential different place that it might do this and it might do that. So let me make sure I've calculated this and I've calculated that. Let me make sure I put an alert over here and an alert over here. It's the same. It's the same like footy. And you could probably, you know, relate it to a million other things. You heard a saying, you don't have to get ready if you stay ready. Yeah? Trust me, you are not going to make, I'm telling you right now, you are going to make absolutely zero amount of millions trading, like, you know, meme shitcoins in this crypto run, or trading altcoins, or trading these markets if you are not trading. If you're not in the position to buy this meme coin, or to take a chance, to put a little $50 here, a little $100 here, you're not going to turn that $100 into 50K if you're not in the game. You're not going to be able to take this trade if you didn't identify what the market may be doing and you're ready for it. Okay, so right about now we had a little bit of an alert as this market seems like it's making a bit of a manipulation W out of the area that we identified a long time ago that the market might tap into. But it's not enough for me to just hit the button and go. You're also getting a bullish candlestick pattern, okay, which is these two candles, this doji coming in here, and then we're getting a bullish engulfing at the moment, even though it hasn't closed yet. We've got 3.5 minutes before this candle closed. I'm just going to be patient. I ain't in a rush to give the market my money for no reason. I'm going to be patient. Yeah, I'm going to be patient. And what I would say is our GBP USD is also pushing up out of that area, but we've got another 3.5 minutes before it closes and gives me a nice clean closer bluff. All right, on a 3 minute hasn't closed, on a 2 minute hasn't closed. Yeah, all right, so potentially both of them might start pushing out of here. I prefer the DAX one at the moment. Looks like it's got more potential. All right, it's got more potential of us getting in here like this. All right, doing that. That is a 1-to-7 trade, whereas the GU, it's already started running a little piece. All right, so I am definitely watching it. I'm interested. Yeah, I'm interested to see what's going on here. All right, and what I'm waiting for is I'm waiting for the confirmations. I can't just get in here when it makes a W. Why? It made a W over here. Not as pretty, but you know, it made one over here. I need to see it correct and continue. So maybe my entry might be somewhere over here, best case scenario. Yeah, but either way, I can do some prep. I can say, well, if my trade is somewhere around here, I'm placing my stop below these levels. How big is that level? It's 40 pips at least. So I should be opening my cashback Forex again, my calculator, going to my DAX, making sure I'm putting in 40 pips, making sure I understand what's going on. Especially if it's something I don't normally trade. I understand roughly what that number is going to be about. It's not going to be 400 lots. Yeah. So whether or not you're exact, you roughly know for my risk, it's going to be around this number. That doesn't mean you're taking the trade. It just means that you roughly have started to make your run. You're not running full pelt. You're just sidestepping. You're jogging. You're getting ready for the free ball. Yeah, this is how you must trade if you want to be a day trader. Yeah, you have to be able to read and react to what going on in the markets. Yeah, that's what you have to be able to do. If you're a position trader, or if you want to take just limit all the trades that are a lot less involved, you can do so. Always placing your stop above swing highs and making sure you've got a big enough cushion, all right, for the market to breathe. Okay, you can do that. It's a different type of trade. You're going to be in a trade probably longer, all right? But yeah, all right. So anyway, let's go and have a look at the 30 screaming at man because as it's now broken here. So now this is interesting to me. It's ticking off some boxes. It's reacted to an area that we identified, which was an imbalance after taking liquidity. Two ticks in a box. This is maths. This is a checkbox activity. Yeah. It's reacted. It's just taken liquidity from, have a look. My charts are moving a bit mad. All right. It just took liquidity. My charts are moving crazy. From below a London session over here, previous London session. All right. And it tapped into this imbalance. So the liquidity was here. And now that liquidity has been taken, and it's tapped into an imbalance. That imbalance was here on a 1 hour time frame. Okay. And now on a 5 minute time frame, we've seen a potential manipulation W breaking some minor structure. All right. Oh, not quite because it hasn't closed. It didn't close. See, look, it hasn't quite done it yet. Even though my alert started to ring, we wicked up there, but we didn't close above this level. Oh, above this level. I need it closing above the wick as well. All of this wick stuff's a bit of a problem. I need it closing above this little green wick over here. Okay. That's where I want it closing above. So I'm patient. We might see this market, a big green candle come. If it's just, oh, we've missed it. I'll be patient. I'll wait for it to tap back in and either drop my time frame down and get an entry there, or wait for it to tap back in and then close back above and then I'll get in. That's patience. All right. And then later on in the day, GVAN would ask me whether am I in any trades, and I'll show him this trade, me being at 18 bills, as he likes to say. Yeah.
Special number.
From patience. Yeah. Because there's a difference between we just want to get in right now and it was the wrong time, you get stopped out, to now we've got all the confirmations and our stops in the right place that we got in, and now this trade is now running in a direction. Now we're in bliss, now we're in paradise. We're just watching the numbers run up, and now we have different problems. Like, when are we going to take our money? How much money do we want? You know, like, we got better problems. That's what we want. All right. So I'm gonna keep moving. I've got my alert up here. I'm also gonna move this alert that I've got down here. I'm gonna move it up a bit. All right, let's go look at another pair real quick. All right. Let's go look at Euro USD, and we'll look at it alongside the GU and start seeing whether we're getting any divergence. Okay, divergence. All right, so this is Euro USD. Okay, and Euro USD, here's the difference. You see, now Euro USD is just taking the liquidity from Asian session highs, but London hasn't. This is what I said to you. That's why I said I don't really trust that we're gonna make, you know, it's gonna be a bigger move. I said we want. Oh, I told a lie. Oh yeah, sorry, look, they both have. Sorry, I looked away. They both have. No, they haven't. They're both EU. Let's go and make this GU. Let's go make this GU over here. So on one side we should have GU, on one side we should have EU. See? So GU's here. GU hasn't taken these London session highs, these new Asian session highs, but EU has. Okay. Now that alone, we can see some I'm trying to get rid of some of these things because it's a bit, I want to get rid of the big orange box, or at least want to fade it out so you can see better. All right, I'm going to fade it out, and there's some imbalance in this one. Let me get rid of that one as well also, and let me get rid of this also. Okay, and let me see, did we just have a closure? We did just have a closure in there. All right, so I'm going to take a little jab. very little jab in GU, okay, with my stop below that's why? Because I was waiting for a 5-minute closure here, which I've just got a 5-minute closure above this level in here. Now, this is the problem I'm having right now. Is this market just going to come and sweep Asian session highs and then turn around and keep being bearish? Or are we going to push up substantially up into these levels in here at least, and maybe even beyond, to make this trade worth its while? We're going to see, okay? Because at the moment, what we've got here, now we can go back to seeing that imbalance, okay, is EU and GU are correlated pairs, okay? And at the moment, what we've got here, look at this divergence, what it means, okay, is that we've got from, for example, the market at the moment is moving from here, we're here at the moment, okay? And we haven't seen it turn, it hasn't made the structure yet on the 5-minute time frame, but we're going in this direction here. Make it red, make it solid, or make it different color, make it this color here. And over here in the exact same place, we've got this energy doing this. So I'm a bit concerned, but only for issue is it hasn't quite made the structure yet. So I can't use that as really the be all and end all in regards to the confluence, okay? So I'm waiting to see whether this market is going to keep pushing up in here. And this EU is also pushing up, chasing some of the inefficiencies. The inefficiencies we're talking about is some of these imbalances, and that same gap exists in EU also. All right. Same gap, look, exists here in EU. So I personally think that EU is pushing into there. And therefore, I believe that maybe GU is doing the same at least, okay, which will give us that one-to-one kind of energy at the moment, all right? So enough for us to make it risk-free and see whether we're going to push past these levels and start chasing some further liquidity above. Why? Remember, we always have to ask ourselves why. Because on a larger time frame, though we are in this range, this trend coming down here, is we took this major swing low level here. Why is it a major swing low? Because it's one of the lows that are touching my line. Yeah, look, let me show you the difference, because somebody doesn't know the difference between major and minor. This one here is touching my line also, you know. Now, there are other lows in here. Look, it's here, there's some in here. There's some in here, there's some in here, there's some in here. But these are the minor ones. The major ones are the ones that are going to be right at the, you know, the mountain top or the valley bottom. All right, JER 30 is ringing. Let's have a quick glimpse at JER 30, see what it's doing. All right, see what it's doing. Let's have a look. Look how we tapped into there nicely. The area that I identified long before the market got in there. And we are having a reaction on the 5-minute time frame. We are making that manipulation W. It's unfortunate we're so wicky in here. We may have to drop our time frame down. I'm dropped it down here. I'm looking at it. Yeah, I'm looking at it, and it's and I'm still gonna stick with. I want to see a nice closure, you know, above, kind of like, you know, above this level, kind of where I've drawn my entry. I want to see a nice closure above here before I get excited, because the market's, there's a lot of noise in here. And the same way it's tapped and had a reaction, if it doesn't correct and continue out of here, which look, it still hasn't even on a 5-minute time frame closed. Hasn't really closed above. Hasn't really closed above this green wick at the moment. It's just ramping. So I'm going to be patient with this one. Even though it's looking good, I'm going to be very patient with it, okay? It's looking good, but I'm going to be patient with it. Have a look at the GU. As I said, this market may decide it wants to push up and grab some other further liquidity first. Look at the trend that it's been pushing up in. The trend has been pushing up in, it looks like this. Yeah, connecting those data points. Looks like this at the moment. So the trend has been pushing up in, and it could decide that it wants to continue doing that. Well, the problem is we're kind of in the middle of the range, which the market can be doing whatever it wants to do. But look at that little GU entry that I took. It's only a small entry, but it's pushing up towards that Asian session high, which I'm going to be watching to see how the market reacts to taking Asian. Remember what I said. Ultimately, I'd like to be in, this trade overall for a sell because I believe that GU is in a premium. Yeah. However, I need to trade what I see, so therefore I want to see what happens when it takes this liquidity from above Asian. Yeah. Therefore, it just doesn't want me to give anything else any attention. It just keeps hollering. All right. So we've got a minute and 15 seconds to see if we're going to get a closure above here. Okay. Yeah. I mean, I like the whole energy. I like the moving, and I think it's, how long have we got? Got 55 seconds on it. So I prefer this trade to the GU trade because I think it's got more legs in it, at least pushing all the way up into these type of levels over here and beyond, where there's this imbalance, making this a bigger trade. And it's just about, we've got 32 seconds, this candle closing, making a manipulation W, indicating above this level here of all this wick energy, wickety wick wick. That's going to be a closure. Then we might, so it's two energies. You can either take this trade like this, as soon as this candle closes here, in the next 17 seconds, or you can be a bit more aggressive, wait hopefully for a tap in to this level here, and take it a lot more aggressively like that for a smaller risk. That's a closure right there. I would love to hit. I might do both. I may do both. All right. I may do both. Okay. I don't like. It's quite a big zone. Do I need to? It's quite a big zone. I'm gonna test out doing both. All right, but very, very low risk. In fact, we're tapping in right now, so maybe I don't need to do both. Maybe I'll just take that zone here. All right. So 17 pips with your spread, you might as well say 20 pips, okay? And, that's a very aggressive entry. The market's come and tap back in here. I could drop my time frame down right now to see what it does now, what kind of candles are formed right now, but I'm waiting for a continuation before I get involved. It's all too small for me to just hit the button here. I don't want to gamble with it. I'll wait for a continuation to do this, okay? So I'll wait for a continuation to do this. If it doesn't give it to me, my money stays in my pocket and life stays good. All right. If it does give it to me, I manage my risk so I know what I'm willing to lose. Okay. I know that, if I do take a L, it's not going to bankrupt me. I'm not going to be sleeping under a bridge. Okay. And I just take it on my chin as part of the game. All right. However, it's looking like it's obedient at the moment. I'm going to put an alert in here so I don't miss anything whilst I look away. So we've come up to here, our GU. We didn't take the liquidity above the Asian session high, so I still believe we're going to push and take this high. And this is what I'm talking about. Potentially, if you get quite advanced in it, you can learn how to take this trade for this push into liquidity. All right. I believe it's going to, I don't see any reason why this market wouldn't push up into that liquidity. Yeah, it's come all the way up here, it's looked at, it's made another equal high. Like, it makes sense. Yeah, but you have to know how to get into that type of trade because you have to place your stop somewhere. All right. Should we make another window? Let's make another window. And I'll try not to, Trading View does take up a lot of bandwidth, it seems, slows my machine down. Let's go and have a quick glimpse at our NAVs. Nibby Naz the DAC. All right, we're going to zoom all the way out of our NAS. We're going to hit refresh. We're going to get rid of this window. We're going to see Wagwan. All right, again, we're seeing that gap on a daily. So this is something that happened. That price fell very bearishly. All right, as in US dollar gained a lot of strength very quickly across obviously GU, EU, a couple other pairs, and it's left this damage, this footprint across a lot of pairs. Now I'm trying to put in some lines here. Not the best of lines. Not the best of lines. Put in some lines here, and the market at the moment looks a little bit sideways in NAS. Okay, looks a little bit in here. So therefore, the same information applies. The top of that box is where I want to be selling from. The bottom of that box is where I want to be buying from. The middle of that box, I want to be doing nothing. And ultimately, if I'm someone who don't like to trade consolidation, I'm not doing anything in this box until it does something. Okay, so unless this market is going to tap back, push back up in here, give me a lovely entry for the sell. Right now, I don't know what it wants to do. We're in the middle of some consolidation if you really want to go there. All right. The market was absolutely falling to hell, but we've come into this level here. We don't know what the market, we're in the middle of some consolidation, and I don't really want to get that involved in there. All right. Even if I'm even dropping down my time frame, yeah, we can see it taking liquidity. It's just taking liquidity from a London session low. It's just taking liquidity from an Asian session. How do I know that? Because I'm looking at those little red boxes, that little yellow box, little red box here. Yeah, can you see? Just took it from here, liquidity taken. Just took it from here, liquidity taken. It's pushing towards this little swing low where there's going to be liquidity. We can see below there, this imbalance. Okay. However, like I said to you, I don't love it because of where we are in the range. So even though I've marked that all out, I don't love it. This market has definitely been, took a massive dive. I wish I was in here for the sell. Look, I wish I was at top of the range. Yeah. And I was selling from a premium. Am I making sense? I wish that I was here at this time, which was on a Friday, and we identified how the market was going sideways, because I can see it going sideways, all right, which is the accumulation. And then we waited for the manipulation to happen, better wise us knowing as a manipulation M, okay, to happen, for the market to then distribute. I can see it. Look how bait it is. A big bait manipulation M out of this consolidation phase, where ultimately this market was kind of just going sideways in here, yeah, in this little area, manipulated up to take liquidity, nam, yeah, made a manipulation M, zoop, with strength and speed, and then look, presented us with blessings upon blessings of an entry, which even if we put our stop above the highs, the market then went to hell. That's a 1 to 17 trade. So 1 to 17 trade, and there's nothing in that trade that you couldn't have done to take the trade. There's nobody on here who's been here for a while that couldn't have got into this trade. Now, don't get it twisted. Yeah, in New York PM session, we had a little bit of a retracement, but you don't care. You'd still be in larger profits, and the market went to hell again. And then in Asian session, you know, it continued to go to hell. And if you left it open over the weekend, you're in even more hell. You're just laughing your head off. There's no reason couldn't get into this trade. Look at it. Look how bait that is. Where else can we see a big manipulation M up here? Let me ask the simple question. Where else can we see a big manipulation M up here, which is our signal to show us a potential entry? Where else can we see it within that blue box? Answers on a postcard. Nowhere. There isn't a decent manipulation M taken above, you know, a liquidity level anywhere in that whole sideways range until in that yellow box. And as soon as it pops up in that yellow box, we know where our entry is. What I say, normally we were aiming for the middle of the M. If you can't see it, let me zoom in some more, because somebody's on their iPhone and they're like, "Rah, I can't see nothing because I got cataract."
I think it's the backdrop makes it a bit harder to see.
All right, cool. Let me get rid of all the backdrop stuff then. No problem.
Just the yellow, I think.
Yeah, right in here, we can see a beautiful, clean manipulation M. The market was in here trading sideways in here. Yeah? Tell you what, let's go. Give me that question. I
How
love
would you
questions.
have managed that trade? Because obviously that's a monster of a trade. And, when we're in trades, we trade to structure. Um, what would have been the indication that that could have fell completely to hell?
Good question. All right. So, as well as divergence, there's other things. This here made a manipulation W on a 50-minute time frame with a tap in here on the 50-minute time frame. Perfect. Yeah. Right? So let me wipe
You
everything.
mean M?
M. Sorry. Apologies. M. Yeah. Let me remove everything like this. Okay. Let me even hide the indicator. All right. So right here was my sign. Right here was my sign. Why was it my sign? Because the market previously was just going sideways. It was doing this here. It was sideways in a little box like this. And when it pushed out here first, it didn't make what I wanted to see, which was a manipulation pattern. So I didn't care about this here. But when it made this manipulation pattern, I was like, okay. And then it pushed out with strength and speed. I was like, oh, okay. And then I got into the trade over here because I'm wicked and bad. Yeah. And I got into this trade over here. And then we started running. And I was like, all right, now we're running. Okay. Now, Jason asked a fantastic question. We're in that trade. How do I stay in that trade? How do I know it's going to be a runner? Okay. So what I would do is this. I'm in this trade. Now, first and foremost, let's put back that indicator. I understand that the market is going and it's chasing liquidity. Yeah. So we take this, we tap in here. I'm in the trade here. Have a look. I'm in the trade here. Let's go again. I'm in the trade here. Okay. Now, the first thing that I'm going to be looking at is where could this possibly be going? As well as the larger market structure, which was in a real premium, yeah, is where could this be going? Okay. So we can see this, all these levels in here, and we get through this level quite quickly. Yeah, so I'm bust through this level here. We bust through this level with strength and speed. Pow! So what I'm going to be looking at these levels, and I'm going to be saying, okay, this is a New York session low. New York PM session low. Let me try and make it so it's not so intrusive. This is a New York AM session low. Right beside that New York AM session low is a London session low. And then we've got London session low again here. Asian. These are all milestones. It's a previous battlefield. These are all potential areas where this market is going to come up to some sort of question. All right. Okay. Cool. Now, what I want to do is those areas that I've identified, I really want to kind of line them up with the larger correlating time frames. So say, for example, if I go to my, I go and look, where are there some big 4-hour levels? All right. So when I'm looking here and this market is here, this level here is a real point of interest if I believe the market's going to come down. Yeah, so that blue line here is a real target for me. If I believe that market structure is going to start doing something, that's a real target for me. Okay, especially how aggressively this market started to come down, that becomes a real target for me. All right. However, in answer to your question, is I'm going to be the speed of which this market has done this. I would have, by the time we've moved out of here, I'm in great profits. By the time PM session comes, this is completely risk-free trade. All right. Let's let people in. It's a completely risk-free trade. Okay. And if I wanted to go there, have a look. By the time New York session started and we started to see a little bit of a bullish energy coming here, I could have been already taken my 1 to 3. Yeah, so I could have taken 50% off the table at this point if I wanted to. 50% could have come off the table. That's taking partials. And therefore, I've taken a partial of 50% because that was my 1 to 3 as I got into London, New York session. And I don't want it to kick back on me and stop me out. Took my partials, made this market risk-free. This trade risk-free, sorry, not the market. Made the trade risk-free. And now I've got a runner. Yeah. And my runner, very quickly, within this New York session energy, evening, let's run in on, we're seeing here, you know, from 7 o'clock, 8 o'clock, push very, very aggressively into these levels. And personally, I'd be moving my stop. So how I would manage this trade is as and when we're breaking these structures, these blue lines, and I've seen the market close, I'm dropping my time frame down. Have a look. Dropping my time frame down even further because I'll be, you know, I don't want to give back too much money. As in, well, this jumped off a cliff, to be perfectly honest. This jumped off a cliff, zoop like that, yeah, and then it corrected and continued again. My stop at that point would have been above this. Let's see this here stop here. I'm moving it above where that correction was.
So when it jumped, right, is it taking liquidity from all the previous battlefields?
That's right. It's taken all that liquidity. Now this looks like some sort of news event. Yeah, it looks like something was going on. Okay, but either way, you're correct. All of that liquidity from below is taken. No. So it is making me a bit. I'm thinking, all right, it's taking bare liquidity. Is it going to run in the opposite direction? Hence the reason why I'm not going to be sitting in here with my trade at $3,000 saying, yeah, I'm just going to leave it to keep all the way going down to this blue line. I'm not. I am going to be managing my risk. And every time the market gets past one of these checkpoints, these blue lines, and I see it correct and then continue, probably I'll be able to see more in the 1 minute time frame. Let's have a look. Yeah. Not even so much. This really jumped off a cliff within 1 minute. Okay, so something happened. But every time I see it break through my thing here, one of those checkpoints, and this is the first one, to be fair, correct and continue, I'll be moving my stop above the correction. Meaning that maybe I'm at, say for example, I'm at 2.5K and the market's at 2.9. It's basically saying I'm willing to give back $400 to stay into this trade. As I see the market then go again and break structure, have a look how I managed the trade. As it came down here, indicate when I see it break this structure again, yeah, here, breaks the structure, I'm moving my stop again to here. Now I'm securing in $3,000. So maybe the market's at $3,500, I'm securing in $3,000. Every time this market watch breaks this structure here, psh, and then corrects and continues over here, I'm moving my stop. Whoops. I'm moving my stop above this high over here as the market's over here. Every time it indicates, you see like here, for example, look, it breaks structure here, look. It breaks this little level here, boom, starts to correct, but doesn't continue down below until over here. And when I do see that continuation over there, then I can move my stop again over here. Now, in reality, this is Asian session. This is 2 o'clock in the morning. This is early hours. You're either doing this manually, you're up, or you're either going to say, you know what, I'm happy with my $3,000 and I'm closing this trade overnight. Or you're going to leave your stop loss saying, you know what, I'm willing. If it stops me at 2.5K, I'm happy. Because overnight is a bit unpredictable. Remember, like this market's going to go overnight. You don't know, spreads open up, blah, blah, blah. Bro, look, as a day trader, it's not a problem you closing your trade before the end of the day. But personally, as I identified this blue line as a real target, a 4-hour swing low, I might have not closed my trade and stayed in it. And look, this is how I'm managing my trade. Obviously on a 1 minute, you can see a lot of noise. But if I move to my 5 minute, for argument's sake, it cleans it up a little bit. Every time that market indicates, corrects and continues, I'm moving my stop, see, over here. When that market came down here and it closed below this indication, correction, continuation, I'm moving it above here. Every time I'm walking it down. I see the market break some more structure. This is a bit ugly, this here, but let's imagine boom, boom, boom. I'm walking it down. And if I kept walking it down, I never get stopped out. I'm not even stopped out to now. To now, this market doesn't push up against me. If it does push up against me after I've seen it indicate past what? Indicate past the previous structure. Let me zoom in there because I know someone's squinting. All right. Indicate past this structure, correct back into the level, and then continue. Then I move my stop down past where it corrected, above where it corrected. And again, I keep walking it down, moving it from 2.5K to 2.9 to 3.2 to to 3.3. When I'm at 3.3, the market could be at 3.7, 3.8. You're never going to get the whole move. Even when you're walking it down like this, you're actually willing to give away some money. If you're not willing to give away some money because it's got so big, then you just say, damn, let me just take my 4.5K. I'm happy. I'm tired of walking it down. Let me just take my 4.5 and walk it to the sunset. But if you're walking it down, you can't walk it down unless it's structured. In my opinion, don't use 1 minute structure. You'll be using 5 minute or above structure. Because 1 minute is too small. Like, you're just going to get a wick and it's going to keep coming down. At least if this market starts coming back 5 minute, breaking 5 minute structure, you know it's done something. And even then it could break 5 minute structure and then keep going down. But at least you try to give it some breathing room. But I don't want to give it too much breathing room because I don't want to give back no large part of 3.5K. I don't want to be up 3.5K or 4K and it comes back and stops me out at 2K. I mean, am I stupid? I'm not stupid. Mummy didn't raise no fool. I'm saying, listen, me, I'm happy with that money. Yeah, so I don't mind shaving off a quick £200, £200, but I'm not giving back £1,000. Yeah, so that's how I will manage this trade. I would be walking it down based upon structure and based upon what I believe the market's doing. That dotted line is because this is now broken 4-hour swing structure. If I go to my 4-hour time frame, this market has broken that level. That was a target. But it broke it so aggressively that I was still in the trade. If it kind of was fraffing about here, my stop would have been close and then maybe it would have spiked up, stopped me out and then kept going down, is what it is. But it broke it so aggressively, because I am saying if, because I'm not, I wish I was, in this trade, I'd still be in it this morning, right now. Turning around and saying to you that I got a 1 to 17 trade. Now, are you always, like, there is been some sort of catalyst that has made this happen. Yeah, so you're not always going to be in that kind of trade. However, there is no reason why you can't manage it. Let me tell you something. If you're in a 1 to 17 trade, you are going to be willing to stay up at 9 o'clock or 8 or before markets close and be managing your trade. You're not going to be like, I ain't got time for that. You're going to be having time for it. Yeah. So at the moment, let's look at this market at the moment. This is the NASDAQ. Yeah. It's been a bullish market. It got all the way up to all-time highs at this point over here. But since then, we have seen some other things happening. We've seen the market breaking some structure. Okay? We've seen it breaking some minor structure in here because all of these little lows in here on a daily time frame, look, these are all structure. This is all structure. We've seen it break some of that structure. We've seen it actually consolidate a little bit because it came up here and made a higher high after making lower highs and lower lows. Low highs came in a higher high because it was just seeing whether we're really, really about it. Yeah. Do you really want to get involved? And at the moment, you might as well say that this market is trading within this box. As much as we see it jump off a cliff, we are still in this box. The market could come down here, which we know is the bottom of the box is a discount. And it might decide it wants to come back. Or do I come in here? I don't know. Yeah. But I can't just hit the button here in the middle of a range based upon just faith. I can't. Now, if there is enough confluence showing me that it's just taking liquidity from below, which it has just taken liquidity from below these Asian session lows here and this London session low, and I start to see from an hour time frame, I drop it all the way down, in my 5 minutes, start to see what I want to see, which is going to be a manipulation pattern, break of structure. I could get into this trade, but it's missing that one bit of confluence of, I don't like the fact it's in the middle of this kind of consolidation range. So at least if I do take it, I understand the risks. Do you understand? Like, I'm not just in there be like, oh yeah, this is a great trade. And I'm like, yeah, because it's not a great trade, I'm gonna actually be half of my risk. Yeah, because I don't like the fact that we're in the middle of the range. But we have seen it be very, very bearish. And it's like an elastic band. When we see the market do this, it's stretching. It does want to, at some point, come back. And this area here where this gap is, the same gap that we spoke about and we saw previously, is a real point of interest. That the market could decide it wants to come and do that before coming down to the bottom of the range. So that's the only reason why this might tickle my fancy to try and get into this, because it's the start of the new week. It is Monday, which isn't the best days. But if it shows me something, for example, like I said, in my 5 minute time frame, the market is currently consolidating. The market only does three things. If you can't identify what it's doing, whether it's bearish, going down, lower lows, lower highs, bullish, going up, making high highs and high lows, or sideways, making equal highs and equal lows, which is an accumulation. Understand the language. It is accumulating orders either side of the range. Look, if I drop it to the 1 minute time frame, it's going to look very clear. All right. That is going sideways very clearly on the 1 minute time frame. Do we agree? Yeah. So therefore, after an accumulation, what I would like to see is a manipulation. Yeah. And then a distribution. I'm giving you this language because you may hear other people speak about this accumulation, distribution, accumulation, manipulation, and distribution. It's just this. It's just the market going sideways first, then taking liquidity from whichever side of the consolidation, and then distributing in the other direction. It's us waiting for our manipulation W before it taps in and goes in the opposite direction, or us waiting for our manipulation M before it taps in. That's what it is. It's just people be saying stuff in a different way, using different language. So right now, for argument's sake, I would be, if I was really, really keen to get into NAS, I'm waiting for my alerts, which I'm going to put them in. I'll put in one above, and ideally, I'd like the one below to ring, but I don't know. Yeah, so I put one alert above, I put one alert below, and I wait. I'll be patient. And even when the alert goes off, I still wait. So I still need to see a change of character. I still need to see it break the structure. At the moment, this market was made. Look, there's nothing telling me right now to buy or sell this market. More say sell because the market was previously making, have a look, highs. Lower low, lower high, low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, relatively equal low. Yeah, relatively equal high. We're in this area here. Ideally, I want to see it do this, and then do this, and then do this, and then start absolutely going through in an ideal scenario. Going back to where? Going back to that point of interest that we've identified across a few different pairs, huge, massive gap. Yeah, and that huge, massive gap also, sits right below a previous battlefield. So this huge, massive gap is a point of interest. Let me make it a bit brighter color. And it happens to sit right below a previous battlefield. Can you see all of these? Remember, look at this battlefield. When I say a previous battlefield, that's why I use these metaphors. I want you to remember them. This is a previous battlefield whereby, like, if you go back to I watched Gladiator 2 the other day, yeah. Like, there was a wall here. At some point, there was like an army here. This was a battlefield that they was trying to knock down this gate right here. Yeah, they was trying to knock down this gate for time. Have a look at them. Look, they came up here. Bang, no, go about your business. Bang, no, get lost. This was Asian session, couldn't break through. London couldn't get past it. New York couldn't get past it. And then finally it came through with strength and speed and smashed through this area.
Would that have been like the latest news around the AI? Because China released this.
Yeah, could have been 100%. And this is where we factor in, and also if you want to go in here, look, here is another previous battlefield where the market came down, couldn't break it. And again, came down, couldn't break it here. So there's two battlefields in there, one in here, so I missed that one. And this one's right on top of the imbalance. It could have been. See, the point is like this. There's always news happening. The world's spinning. Do you get it? You understand what I'm saying? There's always news happening. Yeah. And, when we're looking back historically, unless we're going to do the research, which is not difficult to do, we could just put in Friday, whatever the date is, and try and search to see if there was any events happened at that time. But there is always news happening. So that's the reason why I'm a technical trader, but I do understand and have respect for fundamental news. So that means when I'm in a trade, or when my trade's going really, really well, I need to know what news is coming up. Because I know if the wrong news comes up, I could see a spike in opposite direction to stop me out. Yes, I could see a spike in the same direction and take me to paradise, but let me tell you something. More times out of 10, you don't get taken to paradise. Yeah, it's just sod's law. Yeah, that unfortunately, the volatility sometimes can make you go. It could go and spike up, take you out, and then go to paradise. And you're just sitting there, with no ticket, and the plane's off to paradise, and you're just standing there on the pavement. Yeah. So therefore, if I'm in good profits and I know there's going to be major news coming out, I might say, you know what, let me protect my position or let me take my money, because I respect the power of fundamentals, but I'm a technical trader. So when I look at this and you say to me, could that have been news? Very, very possibly, bro. It could have been news. But from a technical perspective, I could see how I would have gotten into it.
Yeah.
From a technical perspective, I could see that it's now left a reason that the market may go back there. Did news make it happen? More than likely.
Yeah,
More
because
than
the
likely,
weekend, the first thing this morning when I got up was like China had released this new AI. which
Yeah,
basically
deep.
yeah,
Are you talking about deep search?
yeah, deep seek.
Deep seek, sorry. Deep seek.
Yeah.
I'm all over
I
deep
was
seek.
wondering if I don't know if that affected this.
Well, the deep. Let me say something about deep seek. The deep seek thing's been around for a long time. That's the first thing. The deep seek thing isn't like, one thing you have to understand is, if you've heard it on the news or you're hearing it on social media, there's a very high probability you're late.
Pure late.
Do you understand what I'm saying? Yeah. Now, don't get it twisted. It's chicken, egg and chicken, because sometimes it go into social media, then might give it another little, all the people that didn't know. All the retail traders are like, oh, do you know about Deep Seek? Do you get what I'm saying? Yeah. Well, the guys that are really in that space know about Deep Seek from about 2 months ago. Do you understand what I'm saying? Yeah. And that's where, if you're investing and you want to be an investor and you want to get involved into these businesses and these stocks and these companies early, you must keep your ear to the ground. You must be on Twitter. You must be following people that are, in this space. You must be sensitive to news or things that are in the industry. You have to be close to the fire. You get what I'm saying? Like, you're not going to hear about, well, you have a lesser probability of making your £500 investment in Nvidia, yeah, after Nvidia's like, have you seen Nvidia's earnings on the Shade Borough or wherever it may be on social media? Like, that's late, bro. The stock's already gone mad. You needed to be in Nvidia when man was in his bedroom. Do you understand what I'm saying? Yeah, saying he's up, he's got something. Now, don't get twisted. There was still opportunities after the fact because Nvidia kept going to space. But the new energy right now is Nvidia is going to go to shit. Yeah. But the reality is, if you looked at the charts, the price section of the charts are going to start showing you that before the news reporters and journalists start picking it up. Because you're going to start saying, whoa, and Nvidia has broken structure. You're going to be saying Nvidia is broken structure bearishly. This is looking a bit mad. Like, what's going on? You're going to be able to say, from seeing it from a technical perspective, you're able to go, what's going on with Nvidia? Why has it broken this level? And then when you do your research now, that spurred you to do your research. You start realizing, you start digging, doing your Googling. Oh, the director is leaving, or there's rumors that this is happening, or there's some problems with the equipment and they can't get the right chipset to go and put into there. Then you start going, okay. Because if you was actually owner of that stock and part of that business, you would know about that. You'd be following. The big boys know about that. Do you get what I'm saying? Way before Instagram's going to know about that. Yeah. So that's why they both kind of support each other. Yeah. But like I said, fundamentals, if you want to go for strength, just who's got the bigger muscles, fundamentals have bigger muscles than technical analysis. Yeah. If Donald Trump says something mad, which is just news, economic news, he says something crazy today, who cares about your lines on your charts and that you saw a little bit of imbalance over here? Chart's not going to give a damn. It's going to react. Yeah. But like I said to you, it's not my passion to be sitting here and just reading newspapers and reading, statements and company books and stuff like that, and understand, like, that's not where my energy's at. That's not my strategy. That's not my vibe. My vibe is technicals, but respecting the fundamentals. Look what I said. I said I'd prefer that NAS took the low of this consolidation, and it looks as though maybe that's what it's going to go and do. Yeah, because we've just had my alert go off. I'm glad that it's taking it from below and not above, because it'd been a bit more confusing about being above. However, I still can't just hit the button. I still need to see something. And what I'm looking for right now is, I'd like to see, this is, I'm mirroring what's going on. I'd like to see, even if it comes down some more, I'd like to see this happen. giving me many opportunities to get in either either here, or either here, on the basis that I believe that the market's going to
Yeah.
go to space. That takes patience. It takes you sitting there and waiting, or placing your alerts in a way whereby you're going to get the notification. Like right now, we've seen a little reaction. I cannot just get excited and hit the button.
Yeah.
It's like if it leaves me, it's only going to leave me and then break structure over here, for argument's sake. And at some point, unless there's some real news happening, which might be the case, I haven't checked news, I'm expecting it to come and tap back in before going some more. So that gives me a new opportunity. I will change my game plan now if I see it just zoop, go all the way up here. But for now, and I'm telling you, the retail trader, what do I mean by that? The novice, the newbie, you, yeah? You're not trying to be we're all retail traders, to be fair. We're all retail traders. But I'm saying you don't want to be a crap retail trader, yeah? Start seeing this green candle and they're in. Like, oh my God, it's going, it's gonna leave me. The fear of missing out makes them get in. And then this happens.
It goes. Yeah.
And stops you out. Like, oh my God, got stopped out. And then it starts going again up here for another green candle. And they get in again.
Manipulation
Stops them out again. And they go, oh, you see, every time I take a trade, the market just stops me out. It's like the market knows what I'm doing.
You
Yeah.
didn't even mention then you go in the other way. And then
Oh
it
my
stops
gosh!
you
If you
out.
go another way, now you're just high on drugs. Yeah, now you're just a crackhead, just in your
You're
your
just
room,
pressing
just
it like
doing
a Atari,
madness.
fam.
Yeah, you're just doing madness now. Yeah, we have to turn around and say, look, I need to see these things. If I don't see these things, I am not getting in. If the trade leaves me and goes up for 20 million pips, that's what the Lord God Himself wanted. Yeah, and I just have to live with that. Yeah, but if I see what I'm looking for, I must hit the button with no hesitation. I'm a sniper. I'm cold. Nah, I'm Terminator. Yeah, I have to come and kill. What was the boy's name? Sarah Connor's son. I can't remember his name. I don't care if he's 1 year old. I don't care if he's 15, 18.
You talk about John Connor.
John Connor. I don't care how old he is. I've been sent on a mission that I have got to kill Sarah Connor's son. Yeah. And once I get a clear shot, Arnold Schwarzenegger's licking his head off. I watched the new one and he shot him like there wasn't a new one. I don't even know if it's the new one because it's bare him now. And he killed him on a beach when he was like 17 or something like that. Shot him with a shotgun. That was his mission. And we got to be the same way, but we can't just be licking people down if we haven't got the confirmation that that's who they are. And I'm saying to you, there's so many of us that we get into the point where because we're in front of our computer now, we think that we have to be clicking away. Like we think it's like PlayStation. Like if I turn on the PlayStation, I want to be doing something within 5-10 minutes. I don't want to be going through the menu for 20 minutes. I want to be like, yeah, I'm in the game now. Yeah. This is not what trading's like. You turn on your computer right now, doesn't mean you're in the game right now. It might mean that, okay, there's a potential run to be made here, potential play here, but you've got to wait for the through ball. If you don't wait for the through ball, you will not only get yourself stopped out, you won't even know why you got stopped out. See, this could give me exactly what I want to see and still stop me out. At that point in time, at least I tried my best.
At that point in time, man's going mad.
But this is what you have to fight. You've got to fight that capacity to think to yourself that the market owes you something. Like just because Jay said we're waiting for manipulation W and you've seen it before and it's giving you good profits before, just because it didn't do it this time, that somehow the market owes you, that the market's supposed to know that G-Van's about to do this and give you money. It doesn't work like that, bro. It just at least allows you to sleep a bit better. Because let me tell you something, what the worst one is, and I'm sure you've felt it. You've definitely felt when you've lost bare money in the markets, knowing that you was doing nonsense, knowing that you was like just hitting the button, you was trying to catch fall in life, you was revenge trading, you was doing madness. That is the worst feeling. Like that is a feeling like, oh my God, have I gone mad? Like, am I?
And then only after when you're looking at it, you're just like, what was I even thinking, fam?
Bro, this is what's so interesting to me about trading, because yes, that feeling right there is got to be something in human beings, because I felt it. You felt it. I'm sure Jason's felt it. It's that feeling when you're like, what have I done? Like your hands are in your head, like, rah, like, I don't know if you've ever done anything in any other walk of life. Yeah, where you've done something and you know you shouldn't, like, you know that it's not even you. Like, you've just done something mad. Do you get what I'm saying? Yeah? That is what you're fighting with trading. You're fighting that natural urge to right now thinking to yourself, "Where's gone, Jay? It's swept the liquidity over here. It's gone." Maybe. Maybe it has gone, but I haven't seen that manipulation energy yet. So I'm fighting it. And you know what I've learned to do? I've learned to even take take the win of a trade that I saw and maybe I didn't get in, but it did what I thought it was going to do.
You still feel satisfaction from it without getting the money.
Yeah, because it did what I thought it was going to do. So I was on the right page. Do you understand what I'm saying? It's like you're in I know that we got Jermaine, you're in China. China, is it? Japan?
I think Jermaine cut.
He cut, yeah. But he's in another country. So imagine that you know certain language, yeah? Or you thinking you're learning the language, and at least someone said something to you in the language, and you kind of got it. Like you weren't spot on, but at least you're kind of happy that, oh, you was talking about my shoes. Okay, you're learning. Do you get it? Yeah. So it's like the same principle. Like you have to be in a position to be like, I'm willing to be patient. I'm willing to miss out on this trade. But when you see what you need to see,
100%. You see,
no hesitation.
Yeah. Mm-hmm. German 40 is doing a little something still. Like it's just broken out of that little area.
All right.
I don't know if
let me go and look at Ger 40 and then we can finish up here. Now I'm looking at GU just taking that liquidity and it's just tapping into a 1 minute manipulation M. Remember I took a little jab and I said I'm going to see what it's doing. I like to see it go past here. I actually think it's going to go and break straight through that. But who cares? It's risk-free. And then you said DAX is doing something. Yep, you are correct. DAX is doing something. And yeah, you could get into DAX if you wanted to. I'm going to get into DAX right now. And I am a little bit late. But I'm going to get into DAX as aggressive as I can, which in my opinion is looking like about 40 pips right now. I can't lie to you. And just to see what happens. But yeah, thank you for that, bro. I don't know why my alert didn't ring.
You see potential TP. Yeah? I was looking at just where that gap was, isn't it? Where the gap was created from market open.
It's a good TP, bro. That's a good TP to have, I think. Yeah, that's a good TP to have.
Structure-wise, isn't it?
Yeah. You know, like I said, with me, when it comes to TPs, I don't close out trades. I just move my stop losses. But if you're happy with your profits, close your trade, yes, and put that money in your pocket and go and sail off into the sunset, bro. Yeah, no problems with that.
Yeah, 100%.
Yeah. Well, all right, cool. Amazing day, guys. Amazing day. Thank you for your time. Hopefully you guys learned some stuff off this session. Yeah, and hopefully it's informative.
Definitely. Yeah. I think the main thing right now is that accumulation, manipulation, distribution.
But like I said to you, that is what even if you didn't, subconsciously didn't get, that is what happens in the markets. And when we're looking at our manipulation M's or W's, that is exactly what's going on. The market normally is doing something, then it starts to go sideways. Okay. And then we see our i.e. Asian session is range more times out of 10. We are waiting for the M or W outside of Asian session. That's the manipulation. It was accumulating through Asian session. Then we see the manipulation. Then it distributes. And where does it go to? It goes to one point of interest to another point of interest. So it goes to an imbalance to, or liquidity to an imbalance, or from an imbalance to liquidity on a higher time frame. Yeah, they say the market cycles between internal structure to external structure, internal structure to external structure. So internal structure would be imbalances, would be this, would be previous battlefields. External structure would be liquidity,
swing highs,
swing highs, swing lows. Do you get it? Do you get what I'm saying? Yes, but this is what you already know. So when I tell you something maybe in a slightly different way, or I show you something, your brain automatically makes the connections because it's not nothing you don't know. Do you get what I'm saying? But you might hear another man talking about, we're going from this to that, and you think to yourself that his strategy is doing something wildly different to your strategy. It's not. It's doing the same stuff. Yeah. You get what I'm saying? He's just calling it some other stuff. He's just trying to make you think to yourself that, yeah, boom, they're learning some other stuff you're not learning. Bro, there's one God. You understand what I'm saying? Yeah. And the reality is that within the confines of price, time, and volume, there's nothing else. Do you understand what I'm saying? Yeah, there's no more stuff. All these liquidity, all these indicators work based upon price, time, and volume. Maybe there's some AI taking some information based upon historic information, or maybe, but that's it. Like, man can come up with a million different ways to call whatever you want to call your God, or call God, or call the same thing, call it imbalance, call it this, call it that. But it's the same. You just have to have a fundamental understanding of the language. Yeah, then you can talk to anybody. You can have any conversation in your language. A man can start saying something, you go, okay. So basically you wait for a sweep of liquidity before you get in. Okay, like a power of free, or like manipulation. It's the same. It's all the same. Wyckoff, it's the same. All the strategies are the same, but they have slightly different nuances, all right? And I'm comfortable where I am. I think it's a nice way to learn. It's straightforward. It doesn't try to overcomplicate it. And
it's digestible.
Digestible, man. Yeah, it's digestible, man. I saw some guy on Instagram showing, in fact, I might even have it. I might have screenshotted it, showing a list of abbreviations that he has of like when the markets do different things. You know, this is a BBS, this is a BRB, this is a TFE, this is an AJA,
an SMT.
It's crazy. It's just, who cares? Like, what you on? Do you know what I'm saying? Like
I hear man saying MSS. It's like, bro,
madness, bro. Man's just saying man's just putting letters together. Man's just put letters, put a number in the middle, doing whatever they want to do. It's like, it's unnecessary when you understand the language. It doesn't matter what somebody else is calling it. All right. But yeah, all good, man. All good. We're gonna have a good week trading this week. And any questions that we have, we're gonna make sure you jot them down so Breakfast Club can get them answered. But there's a good question from Jason. Look at higher time frame. In fact, we're gonna watch the thing that Jermaine was talking about. It's China's massive AI breakthrough with something called DeepSeek. For example, I'll tell you this. The meme coin space right now, there's a lot of meme coins coming up calling themselves DeepSeek. Yeah, because they follow the trends. You know what I'm saying? I've already had a look. There's a couple of them doing okay as well. But yeah, I'm gonna hit that button. I'm gonna let you guys watch this if you can do. If you can't, have an absolutely fantastic Monday. But just know you're getting stronger. Every time you be in a session and you're understanding things more and you're getting it, you're getting strong. You're building muscles. It's like the gym. Man go gym. Man don't go.
China's latest AI break.
And do 2 exercises and have abs. Doesn't work like that. But over time, you're getting stronger and stronger and stronger. And if you combine that with some good eating and some discipline, abs will come. Yeah, that's all you need to know. Abs will come. If you're going gym regularly and you're doing abs and you're eating right, abs have to come, bro. Maybe they might not come today, they might not come tomorrow, but they will come. Same with your trading. Guys, have an amazing day.
Love, my bro. Strong session.
Breakthrough has leapfrogged the world.